The market has changed in terms of the clients that are now in this market. Traditionally it was the supplier, the user. We've now moved into a much more fund-orientated market where hedge funds, CTAs have now begun to put more flow through. It's interesting when we look at a block ticket, traditionally it will be a user and a producer on either side of that. Now more likely it's a fund and a producer. Because of this change in the client dimension where the physical is no longer the important thing, they're looking to get access to the price, get access to liquidity. The actual fundamentals of the market has changed. I say that in a positive way because if you look at equities and fixed income markets, still very much bigger than the commodities market, but commodities is beginning to put more pace in there in terms of the volumes, which is obviously good for exchanges, good for execution brokers like ICAP, and also good for those clearers as well.
What role do brokers play in price discovery amidst market fragmentation?
The role of the broker is to help where price discovery is not clear. The buyer and the seller are very interested in doing a deal, but they don't know themselves where that deal should be priced. We can get different varieties of clients now into our deals, and therefore the price discovery of a broker is still very much the important aspect of it. That value that we're giving to the clients now is unmistakably important. When you think about what just happened in March and even April, May, the clients now can easily get into a position or get out of a position because they know that they can come to us and we will find the other side for them.
How did operational resilience hold up during the recent period of record volumes?
And I do feel the industry now, and I'm talking about the exchanges, the clearing houses, the execution brokers and the clearing brokers, are really now in tune in terms of what to do when markets do open up. If you think back to the Sunday night when after the first missiles went into Dubai and into Iran, you have to look at that market was pent up. Everything happened on the Saturday morning, therefore no one could really trade in a cleared market. Therefore when it opened up on the CME and obviously on ICE a little later, there was a lot of demand there trying to get into positions, get out of positions. And I think the clearing houses, the exchanges all did very well in maintaining that. Obviously we had the clients coming to us, we were able to fill those using our systems, but I think you need to look at the market itself throughout March, when markets were high almost every day through March. And I think people should be very proud in terms of the work they've done, but that's come from a lot of effort over many years.
What are the key post-trade and settlement pain points looking forward?
Volumes continue to grow. People have been looking at inflation and the fixed income market has picked up. Equities continues to move forward. It's when you get all three products moving in the same direction in terms of volume that you've got to look at your headroom. And I think that's the key thing that has changed in many firms now. Is they look at their headroom and say, right, I'm at this level today, I could be at this level tomorrow. I don't think that thinking was there 10 years ago. And therefore firms are forward thinking in terms of how they're operating. That's why clients come to us. They want to place the orders and they want to get filled. They don't want to hear that there's a problem with the pipes. They don't want to hear that their trade didn't get filled.
Does the industry focus on clearing margin efficiency impact your operations?
I mean, we've had the move out of span and into different margin methodologies in the last few years, and that's continuing at a pace now across all clearing houses. And I believe what you're seeing is margins now are more, I should call them more intelligent and cheaper. And when margins become cheaper, and that's not merely increasing risk here, it's becoming a better calculation in terms of risk. That then allows clients to then put on more volume. They can take bigger positions because the margins against that are cheaper than they were last week, last month, last year.
How are you positioning your business to capitalise on the energy transition?
These deals that we're doing now are different to our traditional futures and options on energy and power and gas. So for example, if you look at certificates, carbon certificates, they're more of a match principle world. In our world, in TP-ICAP, match principle belongs in the securities world, not in the commodities world. So we've had to look at ourselves and say, where's the best place to process these new markets? We, in commodities, are best placed to handle the instrument, but we need to retrain to understand how securities settle because we need to be able to transition a certificate from A to B.
Do shifting regulatory responsibilities bring clarity or uncertainty?
ICE and LME have taken a different approach in terms of how they want to look at reporting, and we're having to adapt to both. The law says one thing, the interpretation may be slightly different, but as members we have to make sure that we maintain to what the exchanges are saying. So ICE have their view, LME have their view, we're having to basically produce two ways of working for the same problem. And as we bring more products on, We need to make sure that we're maintaining that rules around regulatory reporting. And I think sometimes that can get forgotten in the chase for clients, in the chase for revenue. Products may have to be delayed because we can't get the regular reporting right. We've got to make that decision and be sure of that, because that's how the FCA or the AMF in some of our regulators, they want to see clean reporting. They want to see it accurately and they want to see it timely.
Is 24/7 trading becoming a realistic prospect for commodity markets?
We can open up trading for 24/7. Can we open up clearing? And if we can't open up clearing 24/7, how long has it got to be closed for? Because the issue we've currently got at the moment is that in CME, for example, they will close clearing but keep trading open, and then the next day the trades will flow into clearing. If you do that at weekend, what we say now, we've got to do more margin, so that's more treasury, more cost on the collateral side of things, or are we actually going to move into a world where clearing and trading will both be 24/7? I mean, there needs to be a timeline when clearing does close. We've got to move into the next day. You've got to be able to produce files and data for the clearing members. But that gap's got to be small. And I don't think we've really got to the point yet where we've really discussed about how clearing is going to adapt to the trading of 24/7. Is the market breadth there? Is there, are you going to see oil traders on a typical Saturday afternoon wanting to take a position? I'm sure they would love to then on the 1st of March and 2nd of March, without a doubt. But I think you've got to look at the product space. Equities may be a product that could be, that people may want to do more with over that space. But for me, and a risk hat on, it's really about clearing. Clearing cannot be closed for a length of time if you've got trading open 24/7. And we haven't really discussed that.
What advice do you offer to those entering the industry?
You've got to get away from your screen, you've got to get away from your office, and you've got to meet people. The great thing about this industry is very much still people driven. You've seen everyone at IDX in the last few days. They're sitting down, they're chatting about things, and it's not always about business. There's social, there's family. A lot of people here know each other over many years. If someone coming into the industry thinks that they can be successful just by being behind a PC in their office, I don't think this industry is for them. They need to have access to the market and to the people around the market so they can understand what is really happening, what's changing. Get a view on 24/7, for example. The individual needs to be able to fit into the team. I have 7 teams globally now today. Each team is slightly different dynamically in terms of the location where they may all be, but ultimately it's a team and everyone's got to be part of that team. But also what we do need to see is ability to change and adapt. That's certainly something. The world is changing technically very, very quickly. And unfortunately, if you don't change, you fall behind. That's not a good place. But I still think there's the P word is the most important thing. You've got to have passion. You've got to have passion for the job you're doing, have passion for the industry that you're in. And if you don't have that, then maybe you're in the wrong job.